Hello everyone, welcome to JAIIB CIB Prep. In today's class, we'll discuss about unit number 13, responsibility of a paying bank. And in this particular unit, we'll understand certain sections of the Negotiable Instrument Act which provide protection to the paying bank. For example, section 85, section 89, section 128, and we'll begin our class with section 31, and in between we'll understand about section 10, payment in due course also. So without further ado, let's begin the session. So section 31 of the Negotiable Instruments Act says that if a bank, when you say the drawee, has enough money of the customer, the drawer, uh, and the money is properly available for payment, the bank must pay the check when it is properly presented. And if the bank refuses to pay without a valid reason, it must compensate the customer for any kind of loss. So what are the key features? Number one, section 31 available is applicable. It applies only to banks because a check is always drawn on a bank as defined in the law. Secondly, sufficient funds should be available. The customer must have enough balance in his account. For example, if a person named um, say A has 10,000 in his account and writes a check of 14,000, the bank will refuse to pay the money. But if the person writes a check of 7,000 rupees, the bank should ideally pay. So the customer must have enough balance in his or her account. Number third, the funds are properly available, meaning to say the money in the account should be free to use and not under any restriction. For example, if the account is frozen by the court, the bank cannot pay even if the balance is enough. So there should be no garnishee order, no attachment order. It should not be under lien, so on and so forth. The check must be properly drawn. The check should be filled correctly and signed by the account holder. The signature does not match the one registered with the bank, the check is invalid. And if the bank wrongfully dishonors the check, if the bank refuses to pay a valid check without any valid reason, it must pay damages, but only to the customer and not to the person holding the check. Again, there are certain exceptions to it. If the bank goes bankrupt, the check holder becomes a creditor and can claim money, and the bank wrongly ignores the crossing on a check, the real owner can also claim in that particular scenario. And if the bank wrongfully refuses a check and the customer suffers a financial or reputation loss, the bank must pay for the damages. Now, section 85 and 89, these two sections provide protection to the paying bank. So, section 85 states that if the bank follows proper procedure while paying, it is protected even if the check later turns out to have problems. We'll discuss it in detail. We'll discuss with case laws, don't worry. And section 89 states that if the check has been altered but the change is not visible, like someone changed the amount with invisible ink or very skillfully and it is not visible to the naked eye, the bank is not liable if it acted in good faith. If the signature is forged, what to do then? So now let's talk about a very important situation, forged signatures. So if a forged signature appears on a check, the bank must not make any payment. This is because it's not the real signature of the customer, so there is no mandate from the customer. So when there is no valid mandate, the bank cannot pay. Let's discuss a few important case laws. Number one, Canara Bank versus Canara Sales Corporation. In this particular case, the company's accountant forged the signature of the managing director on 42 checks. But the bank paid those checks. When the fraud was discovered, the company demanded the money, but the bank refused. So, the matter goes to the court, and the court states that the bank should have detected the forgery. It had no authority to debit the company's account because there was no valid mandate. That is why the bank will be held liable. Number two, Beta Cooperative versus Bank of Bihar. So in this particular case, a cooperative society had a joint account operated by two persons, joint secretary and the treasurer. A check was signed by one real person, but the other signature was forged. The bank paid the check. A matter went up to the court, and the court states that there was no valid mandate to the bank, there was no valid instruction provided to the bank because one signature was forged. The bank was wrong in paying, and that is why the bank was held liable. So, even if one signature is forged in a joint account, the check is invalid. Uh, let's now discuss Section 85 a bit. To get legal protection under Section 85 of the Negotiable Instruments Act, the bank must make the payment in due course. So, what is due course? Due course is defined under Section 10 of the Negotiable Instrument Act. When the payment is done, the payment should be made to the rightful person, to the holder, to the agent, or the servant of the holder. The payment must be according to the apparent terms of the check. It should be in good faith and it should be without any negligence. What do we understand by the term apparent tenure? It means what has been instructed on the check, the bank has followed. And if the bank fails to do so, it cannot get legal protection and it may be held liable for the loss. There are three important case laws. Number one, Bank of Bihar versus Mahabir Lal. What happened in this case was a firm took a cash credit loan from a bank. The bank agreed to pay the clothes supplier directly and take the clothes as pledge, the security. A check was drawn and the bank gave the cash to its own employee to go with a partner to the supplier. Now that employer ran away with the money. Bank asked the firm to return the money, but the firm refused. The bank sued the firm claiming protection under Section 85. Now the matter went up to Supreme Court. Supreme Court states that there will be no protection to the bank. Reason being, the payment was made to the bank's own employee, not to the supplier and not to someone from the firm. So this was not payment in due course. Hence, the bank had to bear the loss. So, what is the takeaway from this case? That bank must ensure that the money is paid to the rightful party and not just any person. Case number two, Bhutoria Trading Company versus Allahabad Bank. In this case, a company sold jute and got an uncrossed check from the buyer. The check was made payable to BTC or order. One of the BTC's manager took the check, endorsed it using company seal, and cashed it at the bank's counter. Later, the company said that the bank should not have paid the money to the manager and hence sued the bank. The matter went up to the court, and court held that the bank was not liable. The check was correctly endorsed with an official seal. The bank had verified the identity of the manager. There was no negligence and the payment was made in good faith. This was a valid case of payment in due course. So if the bank follows proper checks, pays in good faith, there is no fraud, there is no negligence, then the bank will be protected. Third case, Madras Provincial Cooperative Bank versus official liquidator. What happened in this case was a liquidator of the company got a check in his official capacity. He went to the bank and encashed the check over the counter. He misused the money and he was removed. The next liquidator who was appointed sued the bank. Matter went up to the court and the court states that the bank was negligent. Law required that a liquidator must deposit all money into a bank account, not take it in cash. So the check was in his official capacity and the bank even verified his appointment. So the bank should not have allowed cash payment. Hence, this was not a payment in due course and the bank had to return the money. So the key takeaway which you can learn from this case was if the check is for someone acting in an official or legal position, bank must follow the legal process strictly. Any shortcut can make them liable for the loss. Payment in good faith without negligence of an instrument on which alteration is not apparent. So under section 89, a bank is protected if it pays a check that has been altered, but the alteration is not visible and the check appears genuine. However, this protection applies only when the payment is in good faith, without negligence, and as per the apparent tenor of the check. So let's understand it with a case law. Bank of Maharashtra versus Automotive Engineering Company. So in this case, a man altered a check chemically using fraud. Originally, the check was for some 95 rupees, 95 9.98 paisa in favor of Mr. Pardawala, but it was changed to approximately 6,500 rupees and the name was altered. This check was deposited in another bank and passed through clearing. The Bank of Maharashtra paid it, thinking it is genuine. The issue arises that the firm who issued the original check found it and objected about the payment. The trial court said the bank was negligent because it did not use a UV lamp to detect the alteration, even though forgery was common in that area. So there was a check which was chemically altered. Visual inspection showed no sign. Uh, a UV lamp for that particular purpose, if used, could have found that the check was forged. The bank did not use that UV lamp, and therefore the trial court held that the bank is negligent. The matter went up to the Supreme Court, and the Supreme Court states that the bank is not required to use high tech tools like UV lamps for every check. If the alteration is not visible to the eye and the check looks normal, then the bank is not negligent. In this particular case, the bank had checked every possible thing like signature, date, serial number, and everything appeared fine. Hence, the bank was protected under Section 89 of the Negotiable Instrument Act, and the suit was decided in the bank's favor. So the lesson is a bank is protected if it pays a check in good faith and does all the usual checks. There's no negligence, there's no fraud on bank's part, and no tampering is visible. Second case is Brahma Shumshri versus Chartered Bank. So in this particular case, a prince had an overdraft account. He sent a check for 256 rupees, but someone intercepted it and changed the amount to 2,34,000 rupees. The bank still paid the amount, and the prince claimed that the bank should have inspected something wrong because the handwriting was different. The matter went up to the court, and the court viewed that the check was signed by the prince and he had earlier issued checks written by others. There is no visible alteration. Therefore, the bank was protected under Section 89. Case number 3, Tanjore Permanent Bank versus S.R. Rangachari. So in this case, Mr. R gave the bank three blank signed checks. One check was correctly used for 16,000 rupees, but the other two checks were altered by the bank's accountant, and amounts of 7,600 rupees and 4,200 rupees were filled in with the names of two clerks. The alteration were clearly visible. The Mr. R sued the bank, went up to the court, and the court decided that the alteration were visible and not authenticated by Mr. R. So bank cannot claim protection under Section 69. If alteration is apparent and still paid, then the bank is at fault. Bank cannot claim protection under Section 89. Bareilly Bank Limited versus Naval Kishore. In this particular case, Mr. N opened an account with approximately 20,000 rupees, and to be precise, it was around 19,900. After 17 months, when he wrote a check for 5,900, he was shocked to find only some 430 rupees were left in his account. Bank said that the three checks were already paid. Uh, it was a long time ago, but the truth is, those three checks were not from Mr. N's checkbook. The specimen signatures used was forged, and the ledger entries were tampered, and even the bank's employees were involved. Matter went up to the court, and the court held the bank liable because the checkbook issued was not used, signature was forged, and there were signs of fraud by bank employees. So in this particular case, bank was not able to get the protection under section 69. Payment by bank under mistake, whether it is recoverable or not, let's understand. So there was a case, United Bank of India versus 80 Ali Hassan and Company. A check for 5,000 was presented to the paying bank by another collecting bank. The check looked perfectly genuine, but actually the signature and writings were completely forged. The paying bank did not realize and make the payment. So the forgery was so perfect, even it was undetectable to a trained eye, right? Uh, the paying bank did not realize and make the payment. Later, the paying bank found out that it was a forgery. Bank filed a case to get back the money from the collecting bank and the pay. The collecting bank states that we did a normal job. We collected the check, gave the money to our customer in good faith. The pay said some people came to me claiming they were from a company. They gave me this check to buy the goods. I supplied the goods only after the bank told me that the check had been cleared, and I have no idea about the forgery. The case went to Calcutta High Court, and High Court dismissed the bank's appeal. Why court dismissed the appeal? So because the forgery was so perfect that even trained bankers could not detect it. Everyone acted in good faith. No one tried to cheat. The pay changed his position. He already gave away the goods before knowing the check was forged. The court held that if someone acts honestly and suffers a loss because of a forged check, they should not be forced to return the money. The paying bank made the mistake, and that's why the paying bank should bear the cost. Now, what is principle of equity? That the principle of equity means fairness and justice, doing what is morally right. It helps to protect innocent people who acted honestly and fairly. So, equity principle states that there should be no unjust enrichment and innocent parties should not be made to suffer. So, let's check your progress now. The law relating to the payment of checks and protection to a banker is contained in Indian Contract Act, no. Reserve Bank of India Act, no. Negotiable Instrument Act, yes. So, C is the correct answer for this question. A customer is bound to inform the dash about lost check leaves, and the customer is bound to inform the drawing bank. So D is the correct answer. Drawing bank is the paying bank. In a joint account, if one of the signatures is forged, who will be liable? Will it be the bank, the bank and customer, or no one? In this particular case, the bank, only the bank will be liable. Payment to be made in due course need not always be made to holder but can be made to his servant or agent. Need always to be made to holder but can be made to his agent or servant, made to customer's agent or servant, all of the above. In this particular case, payment to be made in due course need not always to be made to holder but can be made to his agent or servant, and hence option A is the correct answer for this particular question. Let's move on to practice questions now. Consider the following statements in the context of a banker's obligation under Section 31 of the Negotiable Instruments Act. A banker is liable to compensate the holder of a check if it is dishonored wrongfully, regardless of who the drawer is. So, this particular statement is not correct. The banker is liable primarily to the drawer, not to the holder, except in specific cases. And that's why this particular statement is not correct. Even if a customer has sufficient balance, the banker may refuse to honor the check if the funds are not properly applicable. This statement is correct. Just a moment. So, in this case, statement 2 is Correct. If a check is dishonored due to the drawer's signature mismatch, the bank is not held liable under section 31. Yes, the bank will not be held liable. It is because of customer's mistake. Section 31 imposes a statutory obligation on bankers to honor check duly drawn by the customer. This statement is also correct. Payment of a materially altered check, even if alteration is not apparent, absolves the banker from liability under section 89. So this statement is not correct. If an alteration is not apparent and the banker acts in good faith, the banker gets protection, but not necessary. A full exemption is provided to the banker. So, for example, if it is a case of forgery, signatures are forged, then will banker will get a protection? No. So, payment of materially altered check, even if alteration is not apparent, absolves the banker from liability under section 89. This statement is incorrect. So, statement 2, 3 and 4 are correct, making option B as the correct answer. XYZ Private Limited maintained a current account with ABC Bank. As per the company's mandate, the checks were to be signed solely by the managing director. The company's accountant, who had access to checkbook over several months, forced the MD's signature on 35 checks amounted to 4,20,000. These checks were presented to ABC Bank and were honored without detection. Upon internal audit, the fraud was discovered and XYZ Private Limited demanded reimbursement from the bank, claiming lack of mandate on the forced check. ABC refused, stating that the company's internal control was weak and it was an employee of the company who committed fraud. XYZ sued the bank for recovery based on judicial precedents, who is liable for the amount of the forged check. It is the bank who will be liable because there was no valid mandate to pay on forged checks. Hence, B is the correct answer for this question. XYZ Textiles, a partnership firm, approached ABC Bank for cash credit facility. As per the agreement, the loan would be disbursed for the purchase of cloth bales, which would be placed with the bank as security. The firm was to draw a check in its own name and hand it over to the bank. ABC Bank then entrusted the cash to its employee, Mr. Kumar, to accompany the firm's partner to the cloth supplier and make the payment directly. However, Mr. Kumar absconded with the money before payment was made. ABC Bank, having failed to recover the money from the partner, filed a suit claiming protection under Section 85 of the Negotiable Instruments Act. Based on the principle laid down in the Bank of Bihar versus Mahavir Lal, is the bank entitled to protection? So bank will not be entitled to the protection because the payment was not made to the firm or its authorized representative. As simple as that. So option C is the correct answer for this question. Consider the following statements in the context of judicial interpretation under section 10, 31 and 89 of the Negotiable Instruments Act 1881 and choose the correct ones. A paying bank who honors a forged check is never protected under section 89 even if forgery was so skillful that it escaped detection upon reasonable security. While forged check generally makes the paying bank liable if the forgery is so extraordinary that it could not be detected even by the trained eye, then uh, then there are some exceptions, and thus saying that absolutely will make the bank liable. So a paying bank who honors a forecheck is never protected. So this never is an absolute, and that is why this statement is not correct. In Bank of Maharashtra versus Messrs Automotive Engineering, the court emphasized that mechanical means such as UV lamps are not mandatory and reliance on visual scrutiny is sufficient to prove absence of negligence. So this statement is correct. Section 89 offers protection to a banker even if the payment was not made in due course, provided the customer has history of issuing checks in that manner. No, this statement is not correct. A payment must be made in due course to claim protection under Section 89. In Tanjore Permanent Bank versus S.R. Rangachari, the bank was held liable because the material alterations were apparent on the face of the check and not authenticated, which negated the bank's claim of good faith. So this statement is absolutely correct. In Bareilly Bank Limited versus Naval Kishore, the court held that the bank's failure to detect forged check combined with the fact that the check were not from the account holder checkbook constitute clear negligence, making the bank liable. This statement is also correct. So statement 2 is correct, 4 is correct, and statement 5 is correct. 2, 4, 5, option A, so making option A as the correct answer. XYZ Bank paid a check amounting to 10,000 that appeared to be drawn by MNO Private Limited. The check was presented by ABC Trader through their collecting bank. After the payment was made, it was discovered that the check was entirely forged, but uh, both the signatures and all the writing. The forgery was so skillfully done that even an experienced banker could not have detected it. Upon discovering the forgery, XYZ Bank filed a suit to recover the amount from both ABC Traders and their collecting bank. ABC Traders argued that they received the check in good faith as part of a routine business transaction and delivered goods only after confirmation of the check's clearance. The collecting bank also maintained that it acted in good faith and collected the checks in the ordinary course of its business. Based on the legal precedent established in United Bank of India versus A.T. Ali Hassan and Company, which of the following is the most appropriate outcome of the case? So in this particular case, the paying bank will not be able to recover the money either from the collecting bank or from the payee. So let's read options. XYZ Bank can recover the money from both ABC Trader and collecting bank. So this is not correct. Only the collecting bank is liable as it presented a forged instrument. No. XYZ Bank cannot recover the money from either ABC Traders or the collecting bank due to estoppel and equitable principle. Yes. This is the correct answer for this question. ABC Trader is liable as they received the benefit. So this option is not complete, but nonetheless, option C is the correct answer for this question. ABC Trade is liable as they receive the benefit of the check. Let's see. So option C is the correct answer for this question. I hope you clearly understood uh, about the responsibility of the paying bank. But if there are any doubts, please don't hesitate to reach out on our Telegram group channel, JAIIB CIB Prep. See you in next class. In next class, we'll talk about responsibility of a collecting bank. Thank you for watching this session. Bye bye and take care.